Now, the question of the day is, of course, what can stop this relentless rise of the dollar itself? It is just against everybody up apart from those two in the major sort of section.
Yeah, thanks, Rish. I mean, we've done some work around what's driven the dollar rally year to date, and it's a very simple answer. It's basically higher US rates, lower equities, higher energy prices because the US is self-sufficient, and also weaker China because the US has the least export exposure to China as a percentage of GDP. So I think to ask the question around, can the dollar peak anytime soon? Are any of these factors really reversing? I think maybe oil prices are coming off a bit, but otherwise, the Fed is still hawkish, equity is still under pressure, China is still weak. I do think by the time we get to year end, we could see a bit of an inflection, and that really depends on the Fed's reaction function. I think when the Fed funds rate is, say, above 3.5%, closer to 4%, they might, shift from inflation autopilot to data dependence, growth data dependence, which I think could mark a peak in the dollar, but we're clearly not there yet.
How much of a driver is what we're seeing in Europe as well? The fundamentals don't look good, and this energy crisis as well. Is that driving moves in the dollar more?
Oh, for sure. I mean, you just have to look at yesterday, right? The ECB was hawkish, no matter what way you cut it, and the euro weakened. And that's very much like what we've seen for the pound, for the Korean won, for the New Zealand dollar, where central banks have been hawkish, they're hiking rates, but into much weaker growth. The only difference with the euro is that the policy rate is still below neutral. But I think yesterday's price action clearly told us that hiking rates is not going to be sufficient to support the euro for the time being.
Where it is maybe close to sufficient is the RBA, and they've started to say we're maybe close to neutral. It's probably more growth data that they're looking at right now. Was that a pivot from the RBA?
It seemed like the governor's speech definitely seemed like a bit of a pivot, and we do think from the October meeting onwards they'll shift to 25 basis point increments. It's a gutsy call. I mean, they're probably the only central bank that's kind of saying we're going to slow the pace moving forward. And it's gutsy because the policy rate has just got to neutral. Whereas I think for most other central banks, they're saying neutral is not good enough. We need to be at restrictive. We need to be above neutral. So it's an interesting pivot from the RBA. It did weigh a little bit on the Aussie yesterday, but I think it'll really depend on how the inflation numbers print over the coming months.
When you look at currencies in this part of the world, I mean, how much is it all dependent on whether they are net commodities importers versus those which are exporters, and depending on their current account? So, there are different fortunes for different currencies, naturally. Yeah.
It's critical. Like the import side of things, we've been talking about for a while because oil and gas prices have been going up. Oil prices now coming down, but gas prices still high. But what I think is far more important from a trade perspective is the slowdown in net exports. This week, we've had China and Taiwan report exports weaker than expected. If you actually look at Asia export data surprises, they've been positive since 2020. And my measure of Asia export data surprises has only just reached close to zero. But I think this is a trend that's going to continue. If Europe's in a recession, US is slowing down, China is still weak, Asia's export numbers are going to look a lot worse over the coming months. So I think Asian currencies, you might see a bit of a relief in the short term, but generally our view is dollar Asia continues to move higher because of this export slowdown over the coming months.
We are just hearing some lines now crossing when it comes to Japan. The finance minister, Shinichi Suzuki, once again talking about these moves in yen, abrupt moves in FX, undesirable, concern about excessive moves in FX, watching FX moves with great interest. Yeah, if these FX moves continue, can take various steps.
Can.
Will they? Will they? Are we likely to see any response from Japan, Adarsh?
So I sense a lot of skepticism here, and I think yesterday as well, after that joint meeting, some of the markets said, "Oh, there was no joint statement like we saw in June, so this is not a very aggressive response." Yeah. However, I would say what I heard from Kanada in particular yesterday, his comments were definitely stronger. The strongest we've seen so far. So he talked about fundamentals not justifying the moves in the yen. I think that's a pretty important comment. They haven't really talked about fundamentals and the justification for the yen move. And actually, I think part of the reason they didn't release a statement is, they couldn't have been as aggressive in a written statement, right? And if you go back to look at the June statement, everything that Canada said yesterday was a lot stronger than what they had said back in June. So I think, of course, I know there's the skepticism on not just you, but FX traders as well. And we need to see action. But I do think we're definitely on intervention watch now. It's been a very sharp move. The volatility is higher. The rhetoric is stronger. It's definitely something we need to watch out for.
Adarsh, we had Seth Fisher from Oasis the other day, and he was saying that perhaps there are many people within the cabinet itself who are secretly happy about the yen's weakness.
Right. The cabinet, I'm not sure. Bank of Japan for sure. Like Kuroda and that gang is definitely happy.
If anything's going to cause inflation, it's
this. This is the whole point of yield curve control.
Yeah.
So why would they fight against it? The cabinet, of course, have a lot of different interests. I mean, obviously the importers are suffering. There could be an energy problem later in the winter, so it's a bit more difficult there.
Well, one more step towards direct intervention is they have to convince, it's not just a unilateral decision on the part of Japanese, right? They have to
No.
convince the Treasury, the Americans, it's a good decision, and like how probable is that too?
Yeah. So we made that point for quite some time. We know the MOF, will need some sort of tacit approval from the Treasury to intervene. We'll never know if that actually happens.
Yeah.
But of course, I think the more volatile the yen gets, the weaker. I mean, this has been mainly a yen depreciation. Like the euro hasn't weakened as much and so forth. I wouldn't say intervention is our baseline scenario right now, for partly because the US is probably perfectly happy with a strong dollar. But the longer this continues, obviously we get closer to that intervention risk.
Base case for dollar China.
Oh, still higher. I mean,
Yeah.
we have a forecast of 7.1. It's probably too far out, but we could get there sooner rather than later. The key thing with China is the CFED's basket. Okay, clearly with the fixings, we know the PBOC is trying to contain the volatility of dollar CNY, but the CFED's basket is still too strong, and China's exports, net exports, is going to be a drag on growth in the second half of the year. So our view is the CFED's basket needs to be below 100, which probably means dollar CNY needs to be above 7.